Today, we're talking about advanced retirement strategies. And as most, if you've been a listener of the podcast for a while, anything we talk about business and retirement strategies and those types of things, we bring on both an expert and a friend, Matt Ruttenberg over at Life Inc. Retirement Services. So Matt's going to be coming to us today talking about what are some of those options for advanced retirement strategies. So Matt, welcome back to the show.
Yeah, Mike, thanks for having me on again.
Yeah, and one thing that we kind of want to focus on, at least on this episode, is to say that when we talk about advanced retirement plans, it's not something that is relevant to everybody. Now, this knowing this knowledge and understanding this when you get to that level is a good thing to know, but not everybody's going to jump into this advanced level right from the beginning. And so if you're listening to this and you're like, no, I'm just not ready to contribute that amount or that much, and this doesn't seem to make sense for me, definitely check out our previous episodes with Matt where we talked about retirement strategies that are available to you if you have no employees. So we're looking at SEP IRA, solo 401k, as well as retirement strategies that are available to you when you start to have employees. So simple IRA, safe harbor, 401k, those types of things. But what we're going to be talking about today is for those of you that said, hey, I've already maximized, I've done all I can on those retirement strategies there, but I still have income and I still have amount that I want to put away towards retirement. Now what's available to me? Or I really want to take care of key people in my business. How do I do that without necessarily giving this benefit to every single person out there? And so that's when we talk about this advanced retirement today. That's what we're going to be focusing on is those that have exploited kind of everything they can in their regular, normal retirement plan within their business and saying, I want to do more, or I want to do something more unique. And so that's kind of where the conversation is from there. So Matt, I'll kind of open up the door for you to come in and kind of just give a wraparound of what are we talking about today? Kind of who is this for? What's relevant? And we can start the conversation from there.
Yeah, absolutely. Yeah. So like you said, it's perfect. This isn't for everybody. These are strategies that I think we've talked multiple times over the last few weeks of a certain level of net revenue, even with like alongside tax planning that you talk about. There's certain things that unlock once you reach certain net revenue tiers, if you will. So what we're kind of going to talk about is a basic concept, a basic structure, layering different kinds of, I call them a retirement plan stack, but layering different types of plans on top of each other. Brief overview of how we do that, but then really get into the larger options. And then perfectly what you said before. Yeah, we're talking about you as the business owner or individuals that you want to take care of in your organization. So let's kind of get started. I say this, I think every single time I'm on your podcast, is we always start with these two questions when we talk to somebody. Number one, why are you doing this? What is the priority? Is it for you? Is it for your employees? Is it because the state is telling you, whatever state you're in, are they telling you have to do this? Is it for taxes? Or is it yes to all of those, which is great? And then the second question is how much? How much do you want to contribute? What are you looking for? How much are you trying to stockpile? And that's assuming the first question is, I am the priority. My tax benefits are the priority, or this individual in my organization is the priority. If the answer to that question was the state's telling me that I have to do this now, depending on what state you live in, or I'm doing this because I need to basically compete at a certain level against all my competitors on recruiting high quality employees, then this might not be for you in that situation. But let's kind of talk about what are these quote unquote high income or high or multi-layered plan designs look like. And I think I've mentioned this before too. Picture an upside down 3-layered wedding cake or pyramid. And so where the smallest layer is now on the bottom, the largest layer is now on the top. And basically each level is a different plan design. And when you layer all three on there, you can get up to over $300,000 of contributions into your retirement plan. And some of them are actually unlimited depending on the type of plan. So let's kind of start with the bottom layer really briefly. That's the 401k. That's you as an employee of your own company. This is your employee contribution of the $23,000 that we all know and love at this point, right? So that is first layer. Second layer is the profit sharing. How do we design the profit sharing? Again, if you are the number one focus, how do we get around some of these fairness tests, as I call it, your annual testing, to where everybody has to get a certain amount, but at the end of the day, the goal is to get you the majority of those contributions. So that's your second layer. But today we're really going to focus on that third layer. That's where you get into the really high level designs to where we can get you into the 6 digits of contributions, whether it's pre-tax, if it's a non-qualified type plan to where you're not getting the tax deductions today, but you might get the tax benefits down the road. And that's going to be my focus today. Okay. So any details, Mike, please interrupt me and we can kind of dig into that during the conversation. But
Yeah, no, I think that was a good thing. And I would even say let's look at a 4-tier cake, and the really small one on the way bottom would be just a traditional IRA or a Roth IRA where you're like, okay, I don't even want to put away more than 5,000. Well, then we might look at something even more simple, just an individual retirement account. But I love that idea of saying, okay, let's look at this. Now, if you're in that fourth tier, that just regular IRA, or if you're in that employee contribution, or if you're in that profit share contribution piece, but that's kind of your maxing out on what you want to put away towards retirement or how you want to take care of employees, you're going to want to look at those previous episodes that we did when we talked about solo 401ks, SEP IRAs, simple IRAs, safe harbor 401ks, those types of things. But now this is for those of you that are saying, yeah, I've kind of done everything I've wanted to do in that area, but I still want to put more towards retirement, or I want to take care of specific people. So let's start to dive into that top tier, Matt, and kind of what that looks like when we talk about options on that more advanced retirement side.
absolutely, yeah. So let's kind of cut that top layer in half. Let's call qualified versus non-qualified. Okay, those are kind of two general concepts. Qualified means that you're going to get that pre-tax benefit up front. When you make a contribution, you're going to get that pre-tax contribution benefit. So this is the cash balance plan, also known as a defined benefit plan, which is all a form of a pension, right? The old school pension from GE and Ford and all that. But the cash balance plan is what we do. That's kind of our bread and butter. That's our sweet spot. And it's more of a, I don't want to call it a casual version, but you are allowed to shut it down later. You can fund it and then turn off the plan and roll it back into your 401k. And the cash balance plan is, like I mentioned, a defined benefit. You are defining the benefit on the tail end, which then in turns calculates how much you can put into it. It's based on the age. It is based on your employee pool because it is a qualified plan. Qualified plan means fairness laws, annual testing. You are going to have to contribute something to your employees, but that's where our plan design comes into play. How do we get the majority of that over to you? You do get that pre-tax contribution. Right now, the maximum, I believe, for 2024 is $275,000 at a certain age limit. And then you're stacking this on top of the 401k and the profit sharing in order to get that pre-tax contribution. And that is the most powerful way to get a tax deduction inside of a retirement plan to date.
Love it. Yeah. And again, like, as you kind of mentioned, that's a qualified plan. So this would be where you're taking care of yourself. And in the likely times, Matt, that, and correct me if I'm wrong, but there's an opportunity where you can contribute much more for yourself than maybe some of your employees based on how you set up and organize that plan. But you are going to involve your employees in this, which can be a really good thing. Some people sometimes shy away from that, but I think that you'll find that employees that are part of plans like this or a pension plan really kind of appreciate that as a benefit as well. So this is not necessarily always just saying, I want to take care of the owner, I want to take care of highly compensated employees, but sometimes it can be is, I want to take care of myself and I really want to take care of my employees too. And this can be a great option that you can add on to your 401k plan that you have set up.
Yeah, and to even add to that, or kind of dig a little bit further, age is really important here. These are great if you were the oldest person in your organization. There is certain plan designs that we get into on that, but we do tend to find that if you are the youngest person or you have older employees, those older employees, everything is age-based. So it's gonna favor those older employees more often than not. So this is a great tool. If you're kind of looking at, you see maybe the retirement, that red zone, you see the light at the retirement light at the end of the tunnel kind of thing. It's perfect for that. But then it's not great, like I said, if you are the youngest, or sometimes if you own multiple entities and you're not necessarily trying to give a little bit to everybody. I do want to give you like a little bit of a caveat here. You are allowed to have different vesting schedules for your cash balance plan and your profit sharing than you do your employee match that you do on that 401k level, like the safe harbor that we talked about in previous episodes. So you can have it and drag it out 6 years. So they have to be with you for up to 6 years in order for you to give them that full amount that you're giving them. So
Mm.
you are able to do that, but there is an annual testing that goes into that play. But multiple organizations, it doesn't really, sometimes that expands how much money you have to give to everybody else. It's called a control group that we've talked about. But let's say, for instance, you don't want to do that. You don't want to give everyone. You feel like, and this is absolutely normal. You're giving the match to everybody. You're giving a little bit of profit sharing to everybody. But that's great because your competitors are probably capping at themselves at that level too. So yes, it's good to set yourself apart as an employer, but it's also good to make sure that you're taking care of yourself because this is your baby. This is your business. And you want to take advantage of what you've built at this point. So that's when we start veering into the non-qualified side of things. And the non-qualified opens up a lot of opportunity to being able to isolate individual people, which are you. It could be your spouse, who, if they're an employee of the organization or another owner. And then you can also highlight key executives or key employees as well, because maybe they have so much weight on your organization that if they were to leave this company, you'd have to take multiple people to replace them. So you need to make sure that you are identifying that person and you want to give them a very, very high level incentive to stick with your company. So that's where these other non-qualified. And when you go non-qualified, there is no fairness test. There's no annual testing. There is no fairness rules involved. You can say, hey, this is for you. You do not get the upfront contribution deduction, but you can still run it through bonus and you can still run it through payroll and things like that for those key employees. So it does help the business. And it's just that the employee or whoever you're giving it to does have to pay taxes in that given year. Okay, so let's kind of break those non-qualified plans down. Let's kind of start at the very top. And then we're going to work down a little bit to a little bit more casual version of these. So the very top layer is called deferred compensation. And what you're doing is this would be for individual employees, not necessarily for you as the employer, because it's kind of unnecessary. But what you're doing is you're promising your employee that, let's say they stick with you for 10 years, you're going to defer another layer of compensation to them in 10 years, for example. So you say, if you stick with me for 10 years, I'm going to give you a whole nother level of income that I'm promising you. And this is administered. This is definitely going to have an administration side of it. But what happens is they will receive this compensation in 10 years at their retirement age, 15 years, whatever it is. And then they can drag that out over 5 years. So they're not getting hit with income all in 1 year. So that's called deferred comp. And you can use that in multiple. You can have that just on the ledger of the company. You can invest that money for future use, or you can use actually a life insurance platform for various reasons to where you are deferring that interest in the taxes on what you're earning inside of that deferred comp. So it is very much administered. They call it golden handcuffs is another term for that. That's another kind of industry lingo for that, golden handcuffs. So let's say you don't really want to go all in on that. You want to have it a little bit more casual version. If we're focusing on an employee, we're going to call it a Section 162 plan. So there's not much administration involved. It's more of a contract between you and the employee, or you and yourself, you and your spouse, the business and the spouse. And it's more of you're bonusing a little extra money, and you're going to put that into a different kind of account to where we can get special tax benefits. Okay. And the special tax benefits are called 7702. So instead of using a custodian like, let's say, Fidelity or Schwab or any of these other 401k platforms where you get the regular tax codes, you're going to use a life insurance platform. And the reason why we use a life insurance platform is because it's unlocking a tax code called 7702. And this is all under the same non-qualified plan level. Okay. So 7702 it basically mimics a Roth. Okay. So what you're doing is the money goes into, you're making the contributions, you are paying taxes on that contribution, but the growth is going to grow tax deferred. And then it's going to mimic a Roth where you'll have a tax-free withdrawal down the road. Okay. So there's a little bit more to that, but when you do that, it's going to mimic a Roth. And the reason why we kind of offer these types of plans is because, one, sometimes when you're contributing $300,000 of contributions into a pre-tax plan, your required minimum distributions down the road, 30 years down the road, are going to be massive, We have clients who are going to have a $900 or $1 million required minimum distribution at age 75. And that's the amount that you have to start taking out of these pre-tax contribution accounts in retirement. Uncle Sam wants to get paid on these accounts, right? So the other reason is you want to isolate individuals or yourself. You want to take care of yourself without having to take care of the rest of the employees. And that's when you want to take care of these non-qualified plans. You want to put the money in these non-qualified plans. So you're getting that long-term tax benefit, not necessarily upfront, but you're getting the long-term tax benefit for your future retirement plan. So you have more options instead of taking all your money out of a pre-tax account and having to pay taxes, the future taxes on all this as well. So there's multiple layers to this, but those are all part of the non-qualified option among various other, there's probably another half dozen options that it's all about how do you get the money out of the company and into these one or more advanced plan options inside of that non-qualified realm.
This episode is brought to you by Taxome. At Taxome, we understand that saving taxes can be complex and overwhelming for business owners. That's why we're here, to be that tax strategist in your back pocket, ensuring that you pay the least amount in taxes as legally possible. With Taxome, you receive a tax savings blueprint tailored to your business needs, unlimited access to our team of tax experts, and an annual one-on-one live consultation. You'll also have access to our comprehensive training with videos, downloads, templates, workbooks, guides, and so much more, along with our monthly live trainings to keep you informed and in control. Thousands of business owners across the country trust Taxome. It's time you did too. Visit us now and take that first step towards paying the least amount in taxes as legally possible. There has never been a better time to join Taxome. Do not forget about our 30-day money-back guarantee. We guarantee that we will present tax-saving strategies that will, at a minimum, cover the cost of your subscription fee or your money back. This is your risk-free invitation to explore the benefits of Taxome membership and how it can transform your approach to tax planning and savings. Go to taxelm.com. That is TAXELM.com. Now back to the show.
Yeah, that makes sense. So I think when we look at this, we were basically saying, okay, qualified, and just so everyone knows, an example of a qualified plan in a non-advanced term would be a 401k, a simple IRA. Those are qualified plans. And basically what that means is that we're taking care of, we're treating people similarly based on different testing and those types of things. So we can't say, well, I'm going to pick and choose. I'm going to pick Bob and Susie, and I'm going to contribute more to them. We're going to do a 10% match for Bob and Susie only, but everybody else we're going to do 0 or something like that. With a qualified plan, there's testing, there's different regulations, there's different things that we need to be careful of to make sure that we're treating it properly. So qualified plans would be your traditional retirement accounts as well as this cash balance plan. Is that right, Matt?
Absolutely. Yep. Absolutely.
And then when we look at
those fall under those annual testing requirements.
Yep, that makes sense. And so then when we look at non-qualified options, the reason that someone might want to look down this route would be to say, well, I'm just looking for a retirement option to take care of myself, or I'm looking for a retirement option to take care of some key employees, but I don't necessarily want this benefit that I'm giving to benefit every single person in my company. And that's when we kind of look down that non-qualified option route.
Yep, absolutely. Absolutely. It's a long-term play. You don't absolutely get the upfront deductions, but the long-term tax benefits are absolutely astounding.
And I think the key thing when we look at advanced retirement planning is that even just we look at qualified planning is that there's no kind of one fit option for every single person out there. So it's not like, oh, you're a business owner with 2 employees, you're going into this type of plan, or you're a business owner with 3 employees, you're going into this type of plan. Like there's some directions that we can lead down, but more specifically, especially when we get to non-qualified or more advanced planning options, is we're kind of formalizing a custom plan based on the things that employee has going on. And so I think the conversation here, and the reason that we talk about this specifically on the podcast, is to let you know there is a lot of options out there. And our goal here is not to say, well, if you're this, and this, here is your exact plan. The goal here is to say, okay, if you're in this realm where you're looking to take care of highly competent employees, you're looking to take care of yourself, you're looking to contribute more towards retirement than maybe a normal plan would be, here are some options and some ideas that are available to you. But then let's connect. Let's connect you with Matt. Let's get you in front of an expert that can really dissect what you have going on from how much do you want to put away, but also as what do you have going on from an employee standpoint, and how are we going to combat that to kind of really build out a plan that's specific to you and custom built for your business.
Yeah, absolutely. And to add to that a little, it's a lot of folks, it's a 401k is not a 401k is not a 401k. Not all 401ks were created equal. It all comes down to the plan documents, the adoption agreements, and how those are designed to be able to add these layers and add these special designs, because not all businesses are created equal, and all 401ks and retirement plans should also not be created equal. And we talked about having these levels of revenue that unlock these different versions. And sometimes if you can't get that deduction up front, that's where tax planning with you've talked about in all your advanced episodes, where you can pair the two and still be able to get these tax benefits in other avenues. Retirement plans are not the only direction to get these deductions on your contribution. There's so many more things to it.
Yeah, no, and I think that's funny. I had a conversation the other day with a friend that hit me up and said, "Hey, I was listening to your podcast and heard this thing about a retirement plan, and I noticed that my employer doesn't do it that way. Are they doing it incorrectly? Like, should I contact them and say, like, you're not doing this right?" And I said, well, that's not actually the case. And because these plans can be so custom, is that your employer might have a 401k, but like you mentioned, just because it's a 401k is not a blanket statement. That's every 401k operates exactly the same, and their contributions are the same, and their vesting schedule is the same. That's not the case. The employer, and you as the employer, you as the business owner, get options and get ways to customize this for yourself. So I thought that conversation was relevant, because you're going to call his HR and start complaining to them. I'm like, hold on, don't do that yet. Look at your plan documents, because that's going to tell you kind of what your employer chose and what your employer customizes a plan for their employees, which happens to be the friend that I was having a conversation with.
Yeah, that's a funny story, because educating everybody. There's a lot of loud players, the direct to consumer companies out there that are just marketing everybody and just pushing all these ads everywhere. There is so much to it. There's a very, very much of a consultative state to this conversation. And I always compare this. It's like you're hiring a CPA versus H&R Block, or a CPA versus TurboTax, or an attorney versus LegalZoom, or something like that in that phase, because there's another level to it that a lot of people miss out on, thinking that a 401k is a 401k is a 401k. Yeah. And it's absolutely not the case.
Yeah. And so I think the cool thing, or the thing that the key takeaway from our conversation today is that, hey, if you're just looking to kind of take care of employees, just do kind of the standard, you're not really looking to put a ton of away, maybe $30,000, $40,000, which can be a good number too. If you're putting $30,000, $40,000 away on an annual basis, that's great. So don't let us downplay that. But I'm just saying, like, if that's kind of your realm and where you're at, and you're at that level or underneath it, check out our different episodes where we talked about the different retirement plans that are available, that if you have employees or you don't have employees, here are some of the plans and routes that we would start to lean down and start to explore. But ultimately, this conversation is for those of you that are saying, okay, yeah, I'm doing that, and I want to do more. As Matt kind of mentioned, with some of these plans, you could put up to $300,000 or more into a retirement account. And there could be an unlimited amount that you can put into a retirement account, whether start to look at some non-qualified options, or you're saying, hey, I love my employees and I am taking good care of them. I have a 401k set up, and they do get a great match from it. But I also have 3 key employees in my business that I really want to ensure that I do everything possible to make them happy, take care of them, because they are such a vital part of my business. This is that door that you can start to walk through and say, like, okay, what are some of those options available there? So I think it's good wherever you're at in your business. This is a good conversation, because if you're not ready for this yet, well, at least what's there, that there's options when that opportunity comes up. And if you're ready for this, that's where we have that conversation. That's where we say, let's get you connected with Matt. And in the show notes, and we're in the show notes, we're going to have a link to a blog post that has a way that you can contact Matt directly. But if you're in anything retirement area, or you're looking for help and you want analysis, you want to say, hey, I don't know what I should be doing. Maybe you have a retirement plan, you don't know if it's set up correctly. Maybe you don't have a retirement plan, you want to get one set up. Or maybe you're like, I did set this retirement account 20 years ago, and now I just want to take it a next step level, or I just want to confirm that we're still in the right spot. Wherever you're at in your situation, it never hurts to get in front of kind of an expert like Matt. And if you're unsure about all this retirement stuff, I'd say check out our episodes. Matt's been on our show for years now. We've been working closely together, and he's really just been a true incredible resource for our podcast listeners, our TaxSale members, our clients at our firm. Matt's just been a great opportunity for anything retirement planning, especially when it comes to the business side. So if you're at that step, definitely do not hesitate to reach out to Matt and his team, and they can kind of get you connected and kind of at least give you a direction. Maybe it's, hey, what you got is perfect right now. That's all you need. Or maybe it is saying, let's get you into a new vehicle, or let's add on to the vehicle that you currently have, wherever you might be in there. So Matt, any parting words, anything else that I might have missed for this conversation?
I mean, there's a slew of other things that we can talk about, of course, always, but love chatting with you. Like you said, just ask, reach out. I would be happy to answer, point you in the right direction, whether it makes sense to work with a company like ours or not. Maybe you're okay where you're at, but ask questions. There's a lot to the retirement plan world, and just feel free to reach out anytime.
Yeah. And I think a good point there, Matt, is that when we talk about this advanced planning, yeah, there's options. There's a lot of opportunities and things that we can do. And we could sit here on an episode and go through every single one and go through the details of all of them. But at the end of the day, what we want to do is just make you aware of, hey, there's things out there. And here are some of the big ones that we often see come through, whether it's a cash balance plan, whether it's a deferred compensation plan, or a Section 162 plan, whatever it might be. Like, there is options out there. We want to make you aware of them. Now let's connect and let's customize those and find out kind of that best option, whatever it might be. Maybe it's something we talked about today, maybe it's not, but wherever that option is, let's build that customized plan. So Matt, I want to thank you for joining. It's always great to have you on, and just kind of the knowledge level you bring to our listeners is invaluable. So thank you for coming on again.
Thanks, Mike. I really appreciate it. And
listeners, thanks for joining. And I will see you guys next week when we continue this discussion of how can you pay the least amount in taxes as legally possible.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening, and have a great day.